Yeah.
Okay, welcome to Weekly Roundup, February what is it? 24th, 2023. I feel like I haven't done one of these in a few couple weeks.
Couple weeks. Yes, you had family event last week that you had to
Yep,
escape to. Yep.
little family appendicitis. So
Yes.
that was always fun. Bringing the kid to Chio, they took good care of him. Cut it right out of there. Home in 12 hours. It's good. We digress. Okay, let's get into it. What happened this week, Ben? Give us the lowdown.
Lots going on in the world. Certainly, I've had a surprising amount of questions about uh, the war, the proxy war, what's happening with China, trade constraints. I think today actually marks. I think it's today that marks the 1 year of the Russia invasion. So lots of questions about that, what that means, thoughts on if that's going to change, what could happen, what are the implications. So lots of conversations about that this week, but the focus from an economic perspective continues to be on what's happening in the economy, what's happening with interest rates and inflation. Bunch of central bankers talking around the world. I saw Mark Carney as well had a presentation last week. Listened to some of his thoughts, and so I'd say that the priority continues to be on that. What's happening with inflation, interest rates, housing continues to be a major part of the conversation with in Canada too. So yeah, lots going on.
Wow, that's great. So, with all these changes to the market, anything going on with the portfolios or making changes there?
A little bit. So with people with cash or new cash coming in, taking advantage. Some stocks have come down pretty hard. Some of the alternative energy names that I continue to like the Northland Power, Algonquin Power, those kinds of businesses, Brookfield Infrastructure. Most of those businesses are built off of leverage, right? And so as rates move up, they tend to come under pressure. So I think it presents a longer term buying opportunity there. So doing a little bit of that from a rate recession perspective, no real change with the view that I think we're in the early stages of one. Which with that as the backdrop, I think rates come down significantly this year. So no change to positioning on bonds because I think that's going to be the counterbalance in portfolios this year. So continue to stay with that. But on the stock side, when the opportunities get presented, been looking to take advantage of that.
Yeah. Do you think it's worth mentioning what we talked about earlier in the week about people holding large cash balances in their accounts? Is that something you should mention?
Yeah, sure. I mean, that's a good point because yields have moved up a lot, and so just sitting in cash, you can earn 4.05% sitting in high interest savings now. So that's a great alternative. One of the other things that we've been doing for clients that have non-registered money. Um, there you could buy 1 year government of Canada bonds and make most of your interest capital gains and just save yourself 25% in tax. But you can earn 4.5% pretty easily guaranteed. And it's been a long time since we've seen that. So if you're sitting on big chunks of money, certainly let us know.
Yeah. Yeah, absolutely. Okay. You got a couple slides for us?
Heck, of course.
Of
I'm not going
course.
to tell you how many I have today. It's too many.
Oh man, you have a lot. I can tell. Okay, we got time.
All right.
Hockey season's
Okay.
over. We got lots of time.
We got time. The I did see a few emails come through into my inbox that are close to us going on air here. So if somebody sent in the questions there, I didn't see it. So I know
Okay.
there's a couple emails that came in. But I don't know if they came to you as well.
No, I didn't see any. But
But
yeah, if anybody has any questions, certainly put them in there for us.
yep, sounds good. Sounds good. So gonna go through talk a little bit about earnings, about the economy, and just a couple other things, tidbits that came through this week. But there's been lots of probably press you've been following in the news, particularly CNBC and BNN, talking about earnings. And this is a snapshot of, 467 of the 500 S&P 500 companies. You're showing a negative earnings growth of 3%. So, on first blush, right, you look at this, look across most of those sectors, everything's red with the exception of industrials and consumer discretionary, a little bit in real estate as well. But if you've gone through a number of cycles with when these companies guide down, and they started to guide down last year, this tends to be the point where the these stocks tend to start to get more attractive, because you want that earnings revision, you want the numbers down, you want their forward guidance to be reduced, because next time they come out and they have a good quarter and they beat, that's when your stocks start to move. So you look at this, yes, we're in likely an earnings recession, tends to be a reasonable signal that there's some opportunities starting to perk up in some of these sectors. So I think it's an interesting way to look at it.
Yeah, very interesting.
Okay. Everyone wants to know about rates. And so presently right now, this is an update on US rates. I think Canada is on hold, but this is on the US side of the table. So right now, this is Hedgeye's forecast. They say kind of two more hikes, but which is 50 basis points. But essentially what this slide is telling you is that the market has priced in 95 basis points, or 1% move higher in rates. That brings you up to overnight rates of around 5.5% in the US. That's what's fully priced into the US from a rate perspective. And so I think sometimes when I have these discussions, and I continue to, is that, there's kind of the view that if they raise rates, that's going to put more pressure on the markets or the economy. Well, at this point anyways, if they raise higher than 5.5%, then yes, there could be more pressure to the downside. But fully priced in, essentially that full 1% move is already priced into what the market's doing and what the market's saying at the present time.
Interesting.
Yeah, so that's looking ahead. So the IMF put this report out this week. I think it's interesting just to think about what's happening in the world, because the questions that are coming is, what's the U.S. doing? What's happening in the U.S. supporting Ukraine versus Russia? What's that impact going to be on China? Is China going to be involved with this? And at the same time, you got to think about what's the likely outcome from here. And one of the things that I've always thought about is, what does China want ultimately? And ultimately, they want financial dominance. They don't want to be in a war. They don't want to be involved in these types of things. So ultimately, they want to be financial leader of the world. And so, this is a great view to say, what was the size of the economy in 2000 relative to the U.S. Versus where we are today. And certainly the standouts and the weak ones would be obviously China, massively grown in the last 22 years, their economy versus the United States, where Japan is shrinking, Germany is shrinking, UK is shrinking, France is shrinking, Italy is shrinking, and India is growing as well. Well, that was a reasonable way to think, like, what's happening? Where's the opportunity for us? That's how I think about what this looks like. But I thought it was a great way to lay it out.
Yeah, great slides today, buddy. Great slides.
Great slides.
Yeah.
A couple more quick ones here. So, there's still, I think, a general look in Canada, the U.S. media, just saying there's so much money in the system. The consumer in both Canada and the US is getting squeezed. There's no doubt about it. So when you look at the statistics here, credit card interest rate, all-time high, consumer credit card balances, pretty close to an all-time high, I believe. So, the consumers are under pressure in Canada and the US. As inflation comes in, which I think it continues to, I think this is important to pay attention to this. And this is all what's happening in real time, and ultimately what we're trying to do with your portfolio is position for what's coming on the other side of this. Okay, last two pieces, and then we can cover any questions if there are any. So, in our effort to continue to do a better job and with portfolio construction and information, we're exploring kind of some of the management tools to help us do that. This was one of the companies that we looked at to help with doing analysis on companies, and thought I'd put it up here. Just a snapshot. This first piece talks just about Scotiabank, for example, and it shows intrinsic value versus the price of it. This is another way that we'd look to add value from the perspective of some opportunities could become here, and we're continually looking at how we can better deliver the offer to you.
Gotcha.
Last one before we go, just a more fun one, is it's always interesting to see where the attention's going in the world. We had Coinbase out this week talking about their kind of rolling out their base layer 2 kind of functionality. They'd originally talked about creating their own cryptocurrency, but they've decided to work with Ethereum. So that's interesting. So it's good to, I think, to follow where the attention's going. And as you look where we are today, this is the top 10 global Google searches. And so, if you look at 4 of the top 5, those are all Google companies. YouTube's number 1, Google obviously 3, Gmail number 4, Translate number 5. Those are all Google companies. And then of course Facebook would be in there. So continued time and attention is going towards these businesses. They'll continue to suck attention and dollars, and I think it's important to think about that as we move along. Last one, just before we jump off, is just the amount of attention that's going towards TikTok. It continues to explode. It has 1 billion users now, if you can believe it. And so, as we think about how the world's evolving, so much attention is going to different areas and platforms. I think it's important just to think about the impacts, opportunities, or risks. And so try to pay attention to that and see what's continually coming in front of us.
Gotcha. Can you just bring up that chart, the economy chart there that had all the different countries? Just Lyle had a question. Where's Canada on that chart relative to the US?
I'd have to explore it a bit more. I'd go back into the report, see if I can see it relative to Canada. So I don't have the answer for you, but I can get that to you.
That would be interesting.
Yep.
Okay. We drive on.
Okay.
Okay, so yeah, good charts today, buddy. What are we looking at for next week?
Yeah, I think we'll continue to follow, see what happens. The week was pretty choppy into the end of the week here, and so US markets were down pretty decent most of the week. Canada had a reasonable rally into the close here, but I've continue to think that things are slowing. If I look at Hedgeye signals on a continuous basis as well, and they started shorting oil about a month and a half ago. Signal today that they are shorting XOP, which is the producers in the U.S. So, I think as this narrative continues to play out, as I continue to follow, is inflation slowing, and what are those impacts, and how quickly are they slowing, and what does it mean from a timing perspective? Like, do we go lower from here? Do we kind of retest the lows of last year? So I'd be watching that, because I'm really excited about some of the opportunities that are coming here. It's just a matter of being patient and waiting for some stocks to come into the price range where I can buy.
Good stuff. Okay. One other thing is next week, I think, is the deadline, right, for RSP contributions.
Yes.
I think most of our clients are done. The ones that preset are obviously already done. So if anybody gets this and they are still want to contribute more, please let us know. If you're wondering which limit is, you can go on to the CRA website, or it would be at the bottom of your statement, your tax statement from last year too, right? Is that where they find that?
Yeah. Yep. Notice of
Okay.
assessment. Yep.
Yep.
Yeah.
All right.
So we have till Wednesday.
Mhm.
Yeah, this year, because it's not a leap year this year.
Yeah, that's right.
Yeah.
Okay. Perfect. Yeah. So let us know about that for sure. Other than that, anything else you want to finish with?
No, I don't think so. I think that's good. Thanks, everyone for listening. We'll send this out shortly as well.
See you soon next week.
Thanks.
Bye.
Take care. Have a good weekend.